Donald Trump will tell you that the economy is recovering. No, not so much. Professor Richard Wolff, an actual economist, breaks it down for us. Check it out, leave your comments, ding the bell, share it with your friends, and subscribe to our channel. Back on the line with us, our old buddy, Professor Richard Wolff, the economist, co-founder of democracyatwork.info, author of numerous books, his latest, Understanding Socialism, democracyatwork.info, rdwolff with 2fs.com, and his Twitter handle, Prof. Wolff, as in Professor, Prof. Wolff with 2 Fs. And Professor Wolff, welcome back to the program. Thank you so much for hanging out with us so regularly. I'm looking at the tweet from Donald Trump saying, "Whoa, 30% growth in GDP, we are rocking," or words to that effect. And then I'm looking at Justin Walfer's reply to that tweet. He's a professor of economics at the Ford School at the University of Michigan. And he says the GDP rose by 7.4% after falling 9% in the previous quarter. All told, the economy is 3.5% smaller than at the end of 2019. He said, for context, that's that's far below its peak in the darkest days of the recession of 2008. So what's the real story here? I'm getting whiplash.
Well, it's a sort of shameless huckstering that we've come to expect from Mr. Trump after all these years. He takes a number, yanks it out of any context in order to present an argument that nobody with even a little bit of understanding would waste time on. Here's what happened. The economy tanked very badly since March. Everybody knows that. What happened was, over the summer, there was this effort, which we now understand terribly misguided, to get us, quote-unquote, back into the economy. All around the world, but especially here in America, restaurants reopened and museums reopened, at least to some extent. We're going to get back into the economy. And so we brought a lot of people back under conditions that weren't safe, hadn't been made safe enough. But we did get 3 months during the summer, that quarter, of uptick, and that's what he's talking about. But the uptick wasn't even close to undoing the collapse that had happened in the 3 months starting around the middle of March. So we are behind where we were at the end of 2019. We are an economy fully in recession/depression. And not only that, but the upturn that he is celebrating doesn't include the month of October, which we're now ending, and in that month, every single indicator, employment, production, you name it, is down again. So we saw a collapse, we saw coming back up a little bit, and now we're heading down again as the corona numbers are coming in. So this is just an attempt, a desperate attempt of a politician in trouble to make something out of what is, in fact, very bad news.
How is the average person who's not an economist and doesn't, have a fingertips grasp of this kind of stuff, how do we know what the economy is actually doing? I mean, for years and years, it's been sold to us the idea that, the indicator of the health of the American economy is the stock market. Well, we know that that's not the case. And now, Trump is pitching, well, it's GDP numbers. Those are the magic numbers. What really should we be looking at?
It's a little bit like the metaphor of a doctor. If you went to a doctor and all he did was, or she did, was to put a thermometer in your mouth, you would not go to that doctor again, because you know that one measure, one index, one calculation doesn't capture the complexity of the health of your body. So you need lots of different tests, and you have to have somebody who understands it explain it to you, somebody you can have confidence in who will tell you, these are the signs that you're in good shape, these are the signs that you've got some problems, here's the best explanation we have, and here's the treatment that we would suggest. We don't have anything like that in our political life. We have politicians desperate to twist and spin anything that's going on to make them look good. Think of it as advertising. when you have an advertiser, all he does is tell you about how good the product is that's paying him. He doesn't tell you its flaws. He doesn't tell you its problems. It's dishonesty writ large, and we're supposed to kind of know it, that it's advertising. But we are, in fact, affected by it. I'm afraid our politics is just another form of advertising in which everybody is trying to grab your attention to tell a story that may or may not have any supporting evidence whatsoever, but believe me, they'll come up with something that they can say positive.
Yeah. You and I talked a few months ago about how the Fed was basically manufacturing money out of thin air and using that money to buy corporate bonds. In other words, to loan money to giant publicly traded corporations, and then later even buying their stock to support their stock in the stock market. Is that still going on? And it's been a while since we talked about it. What's your sense of where that might lead? What is the consequence of this kind of behavior by the Fed? And is anybody, waving some alarms about this?
There are beginning to be alarms raised. First of all, to answer your question, the Federal Reserve is continuing to make credit available, massive amounts of credit at virtually zero interest rate, just above zero, to America's largest corporations. The only honest way to describe that is that American capitalism, corporate capitalism, is now on life support. It is dependent on the Federal Reserve printing money and making it available at almost no cost to keep these companies going, and that's what is keeping them going. Just like the provision of low-interest money is keeping the stock market going, as people can buy stocks with borrowed money that costs them nothing, so they continue to do it because the Federal Reserve has basically signaled that if anything happens to undercut the companies or anything happens to undercut their share prices, in will come the Federal Reserve with even more money. The anxiety now is precisely because everybody knows what I just said, who's in the corporate world. Every company is borrowing money to beat the band. Whatever your problem is as a company, even if what you have to sell is of no interest to anybody anymore, you can get by for another quarter, for another year, by simply borrowing money. It has become the cheapest, easiest way to go to the government to get bailed out, not because there's a crisis, but simply on an ongoing basis. And the anxiety that's beginning to be articulated by even members of the Federal Reserve Board is that we are developing an economy that is unsustainable, that these companies can never pay back the amount of money they owe. They can't earn that in a depressed economy, and that therefore we have, and we even have a new term for it, I'm sure you know it, Tom, zombie corporations. Corporations whose profits now are simply inadequate, simply to cover the interest that they have to pay. And if the Federal Reserve raises interest rates, which it may have to do in the years ahead, well, then these companies are simply going to go belly up, and people are very afraid if that happens, you're going to see the crash of this economy that has only been postponed by what the Federal Reserve is doing.
We just have 20 seconds. Couldn't the Fed just as easily have rolled over student debt and now everybody's paying 0% interest rate on student debt?
Absolutely. They could have and they should have. Here's another scandal. They could have and should have funded the states and the cities. Because of our unemployment, because of COVID, they don't have any money to do this public support that we need desperately. The Federal Reserve didn't do it, and we face, therefore, another crisis in all of our cities and states.